The Australian dollar weakened as traders waited for the Reserve Bank of Australia's next policy decision. The risk is that a rate hold could leave the currency exposed if commodity prices and US dollar strength keep pressing AUD lower. For viewers tracking Australian dollar trades, the useful read is the pressure point, not a broad market mood. The confirmed headline centers on RBA and 3.6%, while the first practical question is what it changes for forex traders. The second number to keep nearby is 0.645, because it shows the scale or timing that makes this story more than a label. That keeps the opening simple. The event is real, the consequence is specific, and the next step depends on the evidence that follows. The evidence points to CPI around 3.6%, support near 0.645, resistance near 0.66, and market focus on whether the RBA holds or hikes. AUD weakened before the RBA decision. Support sits near 0.645 against the dollar. This context matters because the story is not floating on rumor alone. It has a clear status, a known actor, and a measurable anchor. The second confirmed piece is how the event connects to AUD USD and exporters, which narrows the story from general crypto noise to a concrete market or user effect. The card-level baseline uses 0.66 as the supporting signal, but the script treats that number only as far as the evidence allows. Nothing in this baseline should be stretched beyond the stated facts. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The currency reacts to yield expectations, commodity demand, China data, and risk appetite. A hawkish RBA can support AUD, while a hold can disappoint. In plain English, commodity prices and rate gaps drive odd flows. China demand can amplify the currency move. That mechanism is why Australian dollar trades is more than a headline. It tells viewers where the pressure travels, through access, liquidity, policy, user trust, custody, or settlement depending on the story. The mechanism also explains why RBA decision and commodity drag matter more than a broad price reaction. If China PMI changes position, or if 0.645 appears, the mechanism gets a clearer stress test. Forex traders, importers, exporters, and carry trade desks face volatility around the RBA decision and follow-up guidance. Importers and exporters face timing risk. Carry trades adjust around RBA guidance. The affected side is therefore not every crypto holder in the same way. It is the group closest to RBA, the product or market connected to AUD USD, and the users who must act on the changed condition. For forex traders, the practical concern is tied to 3.6%. For exporters, the pressure usually appears through access, cost, timing, or confidence. That is why the practical consequence matters more than a generic bullish or bearish label. Analysts are split between a hold and a modest hike, so the policy statement matters as much as the rate decision itself. A hold or hike is still the key policy split. The statement will show future tightening risk. This scene is the guardrail against turning an incomplete story into a prediction. The confirmed part is the event and the supporting facts. The unresolved part is the follow-through, whether the response, approval, recovery, liquidity, policy step, or user behavior actually appears. The open item is best summarized as policy split, and it should stay separate from 0.645 until a fresh confirmation point appears. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is the RBA cash rate decision, inflation language, employment data, China PMI, and whether AUD breaks 0.645 support. Watch 0.645 break. China PMI and jobs data can shift the outlook. For Australian dollar trades, the clean close is to track the signal that can change the story rather than guessing the final outcome. The path from CPI to PMI is the simplest way to follow the next phase without adding unsupported claims. If that signal arrives, the market or user effect becomes easier to judge. If it does not, the story remains constrained by the current confirmed evidence.